Keckstead from Forex Trading Unlocked, and we are here today on February the 14th, Valentine's Day, with the Forex trading and cryptocurrency trading analysis for you. Before we get into it, I wanted to show you our disclaimer to remind you that this video is for illustrative and educational purposes only. And if you have not done so already, please go to our YouTube channel and or our Twitch channel, Forex Trading Unlocked, and make sure that you subscribe, hit that button, hit the like button also, and leave any comments. We will answer them, and if they're good questions or market questions about something we don't normally cover, we will include that in our next webinar. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. Alright, with that, we're going to get to our live action screen here at forex-trading-unlocked.com. And we have some interesting stuff to talk about today. There's a little bit of quietness in some markets, and some markets are starting to do something. Alright, so let's take a look at what's going on here as far as numbers. There's some auctions that are going on today. We also have GDP for Japan coming out today. That's going to be an interesting thing. Remember that Japan no longer has any COVID lockdowns. They have gone back to normal now for over 2 months. Things are doing well over there. They're, for some reason, all of a sudden, it's amazing how it just disappeared. So their economy is starting to grow. So it'll be interesting to see how GDP starts to come into play this over the next few months. Then we have on the 15th, tomorrow, we have some employment numbers for the UK. We have, let's see, an economic sentiment for Germany. That could do a little bit for the euro. We have some employment numbers also for the euro. PPI for the US is actually big. Might get some bond movement there, which will shake up the currencies. And then let's see, we have then on the 16th PPI for the UK, for the British pound. We also have CPI as well. Those are going to be big numbers to see how those things are moving. Industrial production for the EU, that's also another big number that's going to probably sack the euro, I would assume, especially in the midst of everything that's going on with the Ukraine. CPI for Canada, that's probably not going to do very much for that number, for that currency. Retail sales for the U.S., that's definitely going to be something to watch. Import prices, also a big stemming number for inflation. We've been talking about this for months. We said this already last summer, that as we get into especially the second year of the Biden administration, all these economic numbers are going to be bigger than they have been in years, just because of the fact that we are running with rampant inflation and horrible policies that are definitely retarding our supply chains, our workforce, our employment capabilities in this country, not to mention our ability to move forward with all the mandates that are in place. Then we have, let's see, we have a 20-year bond auction. That's also going to be something going on. Then we have on the 17th, let's see, nothing really going on there. Housing starts and building permits actually for the U.S. That'll be a big deal. Let's see what else. And also, I would actually watch this U.S. pork export sales net thing. Because even though it's a commodity market, with inflation the way it is, especially if we have huge exports of pork, it's only going to drive up the price domestically. Then we have 30-year tips auction. We have CPI for Japan, once again another number that I think you should watch out for. And then as far as that's concerned, existing home sales, another big number for the U.S. All right, we've gone through the numbers. Now let's take a look at what is going on elsewhere. Alright, so we have the euro that's a little bit on edge, following through to the downside today. You can see that it's hovering near its lows. I would say that a lot of this has to do with the fact that it's been in a range for quite some time, and right now it's back in the middle of it. I would look to prod support some more, considering that oil is back up on its highs, something that we should look at here. XTI USD. So OPEC said they're going to start opening up the floodgates a little bit. It doesn't seem to have done anything to the oil market. As you can see, the cash right now made a higher move high today off of Friday's rally. It's slightly lower on the day. I would see that as profit taking more than anything else. I would not look for a big sell-off in oil anytime soon. With the refinery issues that we have from down in Texas that are still lingering in the U.S., and the fact that they will be switching to the crude, I think they switched to the spring-summer blend coming up over the next couple months. That's another thing that's going to drive prices higher. And right now, as far as long as we continue to hold these policies in the U.S. that are basically hampering and destroying the oil industry, it's having ripple effects everywhere else, because everyone equates oil with gas, and gas is next to nothing out of a barrel. One of the biggest parts of inflation that we have right now is because of the price of oil. So when it comes to all plastics, all medical plastics, even drugs, which are made from petroleum derivatives, believe it or not, most people don't know that oil is actually components withdrawn from oil and made into different compounds are used in many of the medicines that we have out there today. So the fact that we are killing the oil industry and driving prices up is driving up the price of everything. Considering, look at where we're at $92. Just over a year ago, we were trading, at a third of this cost. So that's not the 7% inflation they keep on talking about. That's a 200% inflation. So just to remind you, because if it was at 30 and it's 2 times higher, that's $90. So that's $60 a barrel. So thank you very much. We'll see probably another $60 of appreciation going on into the new year. Get ready for seeing those prices that we saw during the Bush era and when we were in the second Gulf War. All right, Euro US dollar once again striking on its support. Do we have any signals? We don't. What I would key off of right now is the last current swing high. This is containing the range. This has been an area where you could see we were bobbling into. It kind of found support, and now it's found nothing but resistance here. Under the current situation, politically and technically, there is no reason to see the euro getting above this 114, basically 115 even. Even if it did, I would say it's nothing more than a big spike before it falls back, at least down into this range. I think the higher end of the range for the Euro US dollar right now is going to be around this 114 area, buffering somewhere where these highs are. And then as far as support, I don't know about that one. That's going to be rough, because as long as these tensions continue, oil prices go up, and energy prices right now are soaring, especially in Europe. This is laying a lot of pressure. So remember, we had those EU numbers that we were talking about. Pay mind to those numbers, and we'll see what happens with them. So there is, let's see, do we have anybody on the chat? Nobody on the chat, right? Oh, we do have a couple people here on Twitch hanging out. That's good. If you don't mind, hit that Twitter and tweet and share our video if you don't mind. Let's see, what do we got going on YouTube here? We have some viewers here as well. Let's see if we got any likes or shares. All right, we don't have any. We could use one right now. There we go. All right, so euro, pretty much just laying on support. If you don't have any questions, that's all there is to it. Sell rally forecast. British pound US dollar, interesting here. Big sideways. This is because of the interest rates situation in the oil. There's a tug of war. Remember, the UK has all the oil that they want, and unlike us, they're not going to stop pumping. So they're definitely taking advantage of the Biden policies and the restrictions that were in place in the U.S., and they are capitalizing off of it in a big way globally. So to say that they are not using our COVID mandates and actions to COVID-19 as a means to capitalize off of the global economy would be one hell of a fallacy. So I would be very leery of selling into the pound US dollar right now. The only thing I could see that would really touch off any major selling would be if we see oil break down back to like $80 or even in the 70s, which is not happening anytime soon, I'll tell you that much. Especially because we're just at the beginning of this rally in oil. So, and this drives currencies. You have interest rates are a function of currency pricing. We know that we have at least 2 to 3 rate hikes coming up in the U.S. between now and in the middle of the summer. It would be shocking to see for us not to do so. We're a little bit behind the curve on this. We should have been raising interest rates years ago. We should have definitely been doing it last year already. But thing is, they're going to raise interest rates now to curb inflation, and that just doesn't work. It's actually the opposite, and we can't go the other way. So since we've been printing money and basically the treasury market's been sold at the top, there's no more room for them. This being said, raising rates is actually going to cause more inflation. So you're going to see it may help to retard the housing market a little bit and slow down the appreciation in home prices. It may actually lend to a crash in the real estate market because right now is the easiest, best time for anybody, good or bad credit, to finance. And moving forward, unless you do have really, really good credit, you are now going to be spending a lot more money for your financing. And anyone that's on adjustable rate mortgages, which we know there are a ton of those back in circulation, those were pressed again 5 to 10 years ago, getting people into them, and people have been rolling through those for the past few years, especially on the bottoms. And now, as they come due in this in this new interest rate environment, their mortgage payments are only going to be going higher. So I think that's going to put a lot of pressure on sellers to get out of homes right now, especially if they can at top dollar. So British pound US dollar, we don't have any type of signal. You can see it's been in a range trade now for over a week. I would key off of the current buffering of the high right here, and I would key off of this little low here, which it kind of was playing with today. So any failure from here, I could see it flirting with this. Now if you see this last major swing low, this is a good support area. This was a 3 inside up buy signal here. You had this last down day here, followed by this little harami buy right here, which kind of almost like a doji, but it's a harami buy, and then followed by this up day here. That makes that a 3 inside up high probable Japanese candlestick pattern. Now this already came up to its price target if it was just a retracement trade. As far as a longer term support target, we are definitely looking at that as helping to maintain the trend. And this is what I would pay attention to. If we fail from $1.34.89 ish and take out this upward sloping support line, well, then I see us leaning back on this 133, 132 area. But as you can see, the pound has been snaking along basically in a range trade now for 6 months now. So this is something to be mindful of. We have looming interest rate raises in the US, but then so does the UK. So the interest rate variable is no longer as strong as it was before, when there was nobody leaning on raising rates, especially in the U.S. But now that you have both countries, the Bank of England and the Fed, U.S. Federal Reserve, leaning on raising rates, those cancel each other out. So now we only have the oil trade. We're restricting drilling in the U.S. We're canceling. There are no new permits, so all we have now drilling is what we have, and as that decreases, we have no more to drill. So we have the oil, but we're just not legally allowed to drill it anymore. So unless those mandates get lifted, which is not going to happen for at least the next 2.5 years, at least, and 3 years rather, until there's a replacement of the current president, you can expect to see inflation continue, higher oil prices, higher medical device prices, higher medicine prices, as well as blacktop and all kinds of other things. Like, it was kind of funny, a friend of mine replaced his windshield wipers on his car, and why would you talk about windshield wipers? Well, the same wipers he normally spent like $8 for now cost over $20, and he's like, I can't believe they're gouging inflation. I'm like, they're not. It says nothing to do with price gouging. I'm like, the materials cost 3 times what they used to, so now you're only paying double what you were paying before. Think about that one. So who's getting squeezed? The manufacturers are getting squeezed, which means earnings are going to start to get squeezed more and more, and that will be reflective in the stock market eventually. Now, British pound, we don't have a signal. This buy signal from a few weeks ago has already hit its upside target. We're waiting for a move, but I would look to buy dips. You're making higher move highs and higher move lows. For the most part, it's just a grind. So now let's go look at the US dollar Swiss. US dollar Swiss, this is Swiss cheese without a doubt, no pun intended. This has been in a range trade for 6 months as well. It looks like a lot of action, but if you look at the high point of the range, which is around 93.5 down to 91 even, for the bottom part of the range, you're looking at a 2.5 cent range for the US dollar Swiss for the last 6 months. So if we put this comparatively on a weekly chart, you can see that even this, we have been trading sideways for all of 2021 into 2022. We bottomed out right here, right at the end of the Trump administration, and then boom, US dollars had a little bit of strength, but as a whole, this has been an ugly grind of a trade. And think about it. The low of this move started out at 87, but then we found support here right around 89 and a quarter. We have 95 basically right here. This is such a tiny range that was set in the first quarter of last year, into the first half of last year, and then since then we've been snaking away, making higher move highs and higher move lows, but it's been in basically a range trade. So are we looking for a breakout to the upside? Very possible. I would key off, obviously, we have to get below 90 cents here. This would be the threshold here. If we take out these monthly lows here from a few months back, that would be a very negative indication that the US dollar Swiss weakness is there. What would bring that about rather? A huge sell-off in oil, an end to the Ukrainian-Russian conflict, and a whole bunch of other factors, which none of this is going to happen anytime soon. But I wouldn't look for a breakout. This is an ugly trade. Right now it's a range trader's delight, looking for opportunities to sell into this upper part of the range, just like look for opportunities to buy the lower part of this range. So that's all we have to talk about the Swiss on the short term and intermediate term basis. Now let's go to the Japanese yen. This is something that's showing some promise here. We had a nice sell-off on Friday, folks, but that didn't hold water very well. We made a lower move low barely today, and now we are positive on the day. With oil prices being up once again today, and also we have, we looked at the crude chart, and we have the U.S. Treasury bond market, which is down 29 ticks, 30 ticks. Remember, in the futures, they use ticks, not pips. Same thing, just called a different word. But that's almost a full handle, meaning a full dollar move in the U.S. 30-year Treasury bond. We did mention that there are some bond numbers coming up this week. To have the bonds trading on their lows, this is just the force that we have to reckon with. The drop in 30-year Treasury bond and 10-year note prices is helping to give strength to the dollar. So because of the fact that we are still a top currency in the world and the fact that our interest rates are going up, that does give us support versus many other currencies, or at least keeps us from sliding very strongly versus other currencies. Now, so we have the fact about the interest rates. Once again, now this is where we have a trade here with the US dollar yen. This one we know that the long-term trend is going to remain bullish because of the interest rate factor. We are not going to be cutting rates or pausing reversing our raising rate stance for at least 6 to 12 months. I would say probably justifiably we need to go on that stance probably for the next 2 years, but we'll see what happens. You don't want to get that far ahead of ourselves, but right now we know that for the next 6 months at least going into July, which wouldn't be 6 months, but that's when we know we're looking to have upwards of 3, possibly even 4 rate hikes, upwards of a whole point, which I think would be smart. They should do it in 2 halves. They shouldn't nickel and dime with quarter points. They should just do a half-point raise, or actually a full-point raise and shock the market. Just to catch up space, because if we do something like that, we actually have room to cut rates, to pull the brakes back a little bit. Remember that he keeps telling you this fallacy that raising rates is going to curb inflation. Raising rates is going to make the cost of everything go up. How does that make inflation go down? By what? Making less people buy stuff? That's just going to create artificially weakening demand. It's not going to change the pricing of goods. Pricing is not going down. So, I mean, the reality is that we're looking at some scary stuff right now where, think about how much it's going to cost planters to plant this season. If you think that bread right now is expensive and other things like that, wait until you see what it costs a year from now, because farmers are paid not to plant in this country. They're definitely not planting. And now you have the farmers who do work in this country, and it's going to cost them 3 to 4 times what it normally costs just to plant and fertilize the land. Then you have their fuel costs, which is 3 times what it was just a year and a half ago, or even a year ago. It's more than double than it was a year ago. So, because we already reviewed the crude prices. I mean, diesel here in Illinois now is over $4 a gallon. I know in California it's over 5. So, and with the continual raise in oil prices, you're going to see diesel going up to $6, $7 a gallon. Farmers run their tractors on diesel. So, and that's the cheap way. If they're the ones that are using gas, forget about it, you know. So, I mean, just the fuel costs alone to maintain, to plant, to maintain the fields and harvest, the costs are exorbitant. So there's just no money there. So there's a lot of farmers that are, why would you can't run a business at a loss, you know? I know that under communist theory, everyone can, if businesses can just exist and not make profits, but that just doesn't really work. That's all fantasy land, you know? So, I mean, these things strike home. Get ready to pay these prices. So, US dollar yen, though, this is good for us because it's going to maintain this trend. I have 117.22 as a nice upside target moving forward over the next couple of weeks. There's some numbers, like we said at the beginning of the webinar today, that are going to impact the US dollar yen. We shall see what goes on with that. I would assume that the trend is going to remain making these higher move highs and higher move lows. Right now, it's a buy dip scenario. We don't have a reason to sell this market because the fundamentals are so strong. Should we get a sell-off, you can see that the baseline here, like to get down to 113, this would be only if we fell down into this below 113 will we start to be like, oh, there's another factor involved here with the US dollar yen. Now remember, the Japanese economy, they're thriving right now. So there is going to be some splits there, but as long as the Bank of Japan doesn't start to get heavily and say we're going to start raising rates, which they're not doing, it ain't happening. Okay? So as long as they maintain their stance there, and as long as oil doesn't get a big sell-off, this trend will remain your friend, and look to buy dips and look for at least a short-term target of 117.20. I have 122 even as the longer-term target for the US dollar yen. And when it does make some big moves to the upside, I wouldn't get out in front of that freight train. So be very cautious if you're longs. Keep your stops tight, just because there may be a little bit of a little profit taking right now. But as far as being a short, definitely keep your stops tight and watch. If anything in making newer move highs, you're on the wrong side, baby. It's just, that's the way it is. All right, now let's look at the AUD USD. Australian dollar, US dollar made a lower move low a couple weeks back, and now it made a lower move high just a couple sessions ago. We're lower on the day, but not very much. But we did make lower lows off of Friday's move. The trend is your friend. Lower move lows, lower move highs are indicative of what? A downside trend. We've had an upside correction, as you can see, but it was thwarted. Remember, early December, we bottomed out here. Made a lower move high here, boom, right at the end of January, lower move low, and we spiked up here and lower move high. So we have this trend in place. This is your friend right now. You can see that we spiked through that. We tried to and failed. Okay, so overall downward resistance is holding this channel lower. Okay, there is no reason to think that this is that this wasn't just a correction. As you can see, after that higher move or lower move high was set and it failed against this downward resistance, boom, we fell through and took out this upward sloping support, holding up the current correction higher. This tells me, and should tell you what? That this market is a bear. It's definitely a sideways to lower trade. So look to sell rallies. I would be very cautious of buying into support in this market. Remember, the lockdowns are very severe in Australia. They have a lot of things that are disrupting their economy, and especially now that they're having the uprisings between their truckers and all kinds of people. They don't cover this on the news, but you can't deny it because it's all over social media. There's no way that these things are not happening. We're seeing this in real time being broadcasted all over the place. So, and as long as that happens, these disruptions between the actions that have been taken because of COVID-19 that have screwed up the economy, now we have these things which is not screwing up the economy, but is definitely going to keep it from moving forward until a resolution comes to bear. And I think it's time the politicians wake up and listen to the people, because these are the people that have worked through the pandemic, and now they're saying we're not working anymore. The people who hide in their closet during the pandemic, they're not going to work. So you got to come to a meeting of the minds and be realistic with the hand. Don't bite the hand that feeds you, and you can see what's going on now. New Zealand dollar, US dollar. This one's in more of a bad way than Australia. They have been pretty much not as hard as Australia on the COVID lockdowns up until the last couple of weeks. Now they are very, very restrictive. Uh, they obviously are a smaller country than Australia. They're very similar in what they produce. They're a commodity country as well. However, their restrictions now have literally completely thrown businesses into there's just no way they can function. Their new COVID contact tracing policies, meaning that, for instance, if you and I were just in the same drugstore, they're following what the communists do in China. If you and I were in the same drugstore on the same day and you test positive with COVID, even if I was there before you and I test negative, I have to go into quarantine for 20 I think it's 21 to 26 days. I'm not sure exactly the number, but it's over 20 days. That's testing negative. That's even if you can prove that you were there before an event had happened. Just because you were in that same location on that same day, no matter at what time, even if it was disinfected later, that's a crazy thing. It's like that makes no sense whatsoever. But that's the way it is. So think about trying to run a business where people go, they come into work one day and all of a sudden there's a phone call or an app thing that says, okay, you have to quarantine or else you'll be arrested. Uh, good luck with that one. Trying to maintain an office environment or a business environment with that, I can't even imagine. So the disruptions there, not to mention the fact that since they can't get their supply chains moving because of their actions, their whole economy is just completely restricted right now. And then as far as, even though they may be leaning towards raising rates, it doesn't matter. It doesn't matter that they have oil either because their oil is not going anywhere. So, and there's nobody working the refinery. It's just absurd. So this is a currency where I would look to sell rallies. Once again, you can see lower move lows, lower move highs. The Aussie definitely looks like it wants to gain some strength and start to bottom. I think that if they start to reverse their COVID mandates, you'll see the Australian dollar scream, because the thing is that they also supply China. They're not able to supply their big dog that buys almost all of their stuff as well as they normally should, and they can't meet their demand. So I'm pretty sure that it's got to be a big tug of war there, and it's going to definitely start to wane very, very soon, especially with the way most countries around the world are starting to wake up and say, hey, we have to get on with life. So we'll see how this goes. Sorry, this is not about a COVID speech, but we don't have the biggest, we don't have any buy and sell signals here in the market, so we're just trying to cover and see where we're at least in the crypto space, which we're almost there, guys. We will have some stuff to talk about. All right, so now let's go to, not the USA, the US dollar, Canadian dollar. Here's another one that's going nowhere. Interest rate and oil were kind of even, except for the fact that we have restrictions. So the more the oil goes up, the more it supports the U.S. dollar Canada and keeps the U.S. dollar Canada bulls at bay. The interest rate factor is one of the only things that's helping to give strength to the U.S. dollar Canada. With the mandates that are in both Canada and the U.S. as far as vaccinated truckers and what have you and whatever, it's like, okay, these people went through the whole COVID-19, the pandemic, without having places to stop for food, for being places to rest. They had to sleep in their trucks for a year while they're doing their jobs, eating out of brown paper bag lunches and stuff like that, so that the rest of us could have food, gas, and everything else. And now they're putting they're screwing with their livelihoods and at the same time all of ours. So I know the one convoy has been opened up on the border in Canada, but other ones are springing up, and this movement is going on all across the world, and this is growing and growing and growing, and enough is enough by the people that have gone through the pandemic. So, and you can see that, we already had a shortage of truckers before the pandemic. Now we're creating a bigger shortage by having these COVID restrictions. So, the narrative with the news now for the medical industry and the trucking industry is that it's fatigue that people are leaving the business. No, they're leaving the business because they don't want to follow a mandate and be part of a medical experiment. So that is their right. Everyone's has their choice with their own body. And the thing is that these are the people who weren't afraid and didn't hide in their homes for the last 2 years. And the people who have been hiding are the ones that keep telling other people, well, even though you're not hiding, in order for us to live, you have to do what we're doing. Well, that's a really tough argument, and this show is not about that, but that's where these disruptions are coming from. Don't kid yourself. It's not COVID-19 that's the problem. It's all the mandates and all the actions to COVID-19 that are causing the problems in the market. This is why we have this sideways. We're winding the coil, folks. So I know anyone that's hung in here for this conversation. Hey, arguing pure XAU USD. Yeah, we'll get to that right now. So, we're done with the normal currencies here. Before we get to crypto, we're going to go and look at, we got Angun on YouTube. Let's see, XAU USD. Here we go, XAU USD. All right, so gold market railing up towards the highs. Let's take a look at it on the monthly here. As you can see, it's been winding around, snaking a wedge here, especially over the past few months, pretty sideways, maintaining the 1750 up to basically just below $1,900 an ounce. This is a key resistance that I think we're going to take out. If you can take a look at this wedge here, by attrition, we were already trying to work our way out. And as far as support, if you look at this, this is pretty much a 45-degree line, maybe a little bit steeper than that, not too much. But this is a good solid trend line as far as the market going up. So as long as it stays above this upward sloping resistance, like it is right here, I would assume that we're going to have a nice rally that's going to take us up towards this $2,100 mark. Now, there's a lot of reasons why this could happen too. Remember how I mentioned about what's going on with Australia and New Zealand? Well, they're both very big gold producers. All right. So with what's going on there, the lack of supply and the need for demand, remember, gold is in high demand for a lot of technology, and a lot of technology moving forward, especially some of the higher end technology. You can't get away with just using copper. You have to use gold. So the industrial demand for gold is increasing. Here's another thing. The cost of, when it comes to gold, there's the price of gold, but nobody ever thinks about what the gold industry is all about. And the money, like I have always said, when it comes to gold, is in the industry. There's more money in the finding, refining, moving, storing, and selling of gold and holding of gold than there is in the actual true value of gold over time. When you think about once you've had it, or to get it, depending on where you are in that chain. So, and right now, it's like with the farmers, do you know what it costs to mine gold right now? They have all those big machines doing what they do and what have you, whether it's the actual mining or the grinding or whatever, the separating and then the refining and then the whatever, and then you have to melt it down, what have you. So just to get to those points, you have to use a lot of oil. Oil is going up, gold's going up. As interest rates go up, gold has a good chance of going up as well. So I would say that there's a lot of gold bears out there. There's a lot of gold bulls out there. So for you, Angun, out there in YouTube land, if you're still there, I would say be a bull. Look for higher swing highs. The one nice thing you can look at here that is very obvious is that since we bottomed out here on this monthly basis, we've done nothing but continue to make higher move highs and higher move lows. This bottom here in August of 2021, last summer, I would say is probably very, very solid. This would be your baseline. Only if we failed from here would I see a big sell-off coming into the gold market. What are the odds of that happening? Right now, probably next to none. So let's look at it on the daily basis. On the daily basis, we've been making higher move highs and higher move lows. Nice little swing trade. We had this nice little pop here. Now this is big. So we made this higher move low here, and then we were trying to make a lower move low, or lower move high, excuse me, but you can see that it never did. So this is just the trending up towards making a higher move high. So we have a smaller trend within a bigger trend. So here's your higher move high, higher move low. We're looking to pierce this high right here to make a higher move high. So this would be your right here. Let me show you, just for those of you, just in case it's not that obvious. So here's your higher move high on a swing basis, long term, and then we have your higher move low here, okay, and then we have up here, we are trying to make a higher move high, question marks, okay, and on the way to making this higher move high and maintaining the longer term trend, you can see that from here we made higher move high, higher move low, higher move high, higher move low, higher move high. Now this low here did take out this one here, that is true, but this is also a bigger wave. You can say that this was a 1, 2, 3 going into a 1, 2 before we have our 3 wave higher. Now, why am I saying 1, 2, 3? For any of you that know Elliott wave theory or other type of wave theories, typically markets trend in 3 to 5 waves, where whether it's 3 or 5, the third wave is typically one of your strongest waves, okay? So if that would be the case, you have here, you have 1, 2, the third wave would be the one that takes us up to higher move highs, okay? So on a wave basis, we're bullish. On the fact that we're floating just below resistance, we're bullish. The fact of the other markets, we're bullish. The trend is your friend. So for you, my friend Angun, I hope I got your number there. I hope I helped you out. Now, as far as you probably want an upside target, don't you? So as far as an upside target, I think if you can get above this 1877 area here on a monthly basis, I think that your next target would be right here. So right around 1970, okay? Anything pushing on this 1970, I think you're going to definitely be looking to take out this high over here. And longer term basis, based on what I see the administration in the United States doing and maintaining as far as their policy, they're going to keep stalling businesses. They already sent a nuclear bomb through the oil industry the first day of their presidency. Now we have the medical industry that has been mandated. We have the military that's been mandated. We have now less, this is a great problem too, because we have less people applying for the military than we ever have in years, than we have in years, and our enrollment's already down. So I read all the mandates that we're doing that supposedly are going to save us are weakening our economy and weakening our country. So we have a diminishing amount of military forces, which makes our country defenseless. We have the fact that our supply chains are all goofed up and reliant on other countries. Our internal supply chains, we're mandating to a point to where no one's going to do the work, and these things are coming to a head. So as long as these things maintain themselves, I expect this rally to continue, and I would say $2,200 to $2,500 an ounce in gold, sometime between, I would say, the end of this year and the beginning of first quarter, somewhere between the fourth quarter of this year and the first quarter of next year. I think we can easily be trading at the $22 to $2,500 mark. And should we see an acceleration of inflation and some other factors, then I would say that it won't be the fourth quarter or the first quarter, but Angun, PRTW, if you're still listening, we could see $22 to $2,500 an ounce by this summer. So let's see what happens after the Olympics are over. I've been calling for China's invasion of Taiwan to occur after the Olympics for the past year and a half. And as far as Russia and the Ukraine, I would use cautious on being too much on Putin just invading there and whatever. I would be very cautious of listening to the narrative we have now about them having all these false blah blah blahs and whatever, and they have these fake movies and whatever that our government's been talking about that they have. They're not showing us, but supposedly they have it. It's all propaganda stuff. And be leery of what we say on our side, because we stoke the bear. I'm no fan of Putin, and I do not want to see war, and I don't want to see Russia move into the Ukraine. However, everything that's happened and led to this moment was because the United States and all the European countries have been in violation of the treaties with the Russian Confederation since the Soviet Union fell. NATO being the biggest violator of all of them. And also, as far as allowing certain countries to be a part of the EU, that was a violation of the treaties with Russia. So we've burned so many treaties with them. To say that they're the aggressor here, they've upheld their deal up until now. And now they're putting up, we may not care about our borders. Obviously, we don't care who comes across our borders, especially on the south. But they do. And the people who are running the Ukraine, those oligarchs there, were kicked out of the old Soviet Union. So this is history. You can look it up. This is not a conspiracy. This is exactly how it went down. And you got to realize our current Biden administration has an interest with the oligarchs that run the Ukraine because, his son, the professor, the crackhead, is also a advisor to one of the biggest gas companies and another company in the Ukraine. So, and Biden also has his own interest in the Ukraine as well. So, do you think that they're there because they want to help the Ukraine? No, they're making money off of these oligarchs, and that's why there was the issues with the last administration with the Ukraine and why a certain party went after them, and now we found out that it was all a fallacy. So that our last president wasn't a Russian spy, was not coercing the Ukraine because of the Russian Confederation, but actually was doing what we were supposed to do in the first place, which was not violate treaties. He was pulling back NATO, he was pulling out U.S. forces, and these are all things that went against what we've been doing for the last 30 years. Remember, the Iron Curtain fell in the late 80s. So we stoked the bear. They're protecting their borders, and is it an excuse to move into the Ukraine? Does Putin want the Ukraine? Of course he does. However, that was part of the deal. They upheld their end of the deal for 30 years. We've been breaking it for 30 years. So just look it up, check your facts, and you'll see what's going on. And I would use caution thinking that Russia's just going to go and move into the Ukraine. If they wanted to do it, they'd already do it. So I think what they're doing is they're feeling us out, and they want to see how our president's going to react. We already know what happened in Afghanistan, so good luck with this one, okay? So we'll see how things go with that one. So that's your question on the gold market. Let's see, do we have any on Twitch? No, we don't, but we have some more visitors there. Thanks for hanging out. Hope you guys have tweeted out this video as we're going through it. All right, so answered the gold question. Now let's get to the cryptos. BTC, USD. All right, for those of you that are hanging out, we're looking at Bitcoin up today a little bit. It's not railing really hard, but it is a little bit positive. Now, we're right now in an uptrend that has started towards the end of January, but we're coming off of a bottom. So I would be very leery of just getting overly bullish on Bitcoin right now. I think this is more of a corrective rally. Do we have any buy or sell signals? Well, we do have a little capper here that happened a few days ago, which put a little halt to this current corrective move higher. Remember, the trend is lower, making lower move lows and lower move highs. Now, we did take out this area here, but we stalled. So this is key. Okay, so is this area becoming resistance? If it is, well then, it's not boding very well for Bitcoin. There's a lot of reasons why Bitcoin could start to sell off in a big way. There's a lot of reasons why it could go to the moon in a big way. So anyhow, the trend here for this correction is pretty good. It's a 45 degree basically. It's a nice path as far as for support. If it's building a base, this would be a nice trend line to hold. By attrition, we're going to come through it, so we would need to get above and make higher move highs. Should we fail to make higher move highs, well then I think that that shows this market's running out of gas, and we'll see this market go back down towards 36,000. We get below 36,000, well then I think this last lower move low here is definitely in jeopardy, and I wouldn't doubt that we see the Bitcoin spike lower into the upper 20,000 area, somewhere around 28,000, 2750. The trend right now is down. There's no reason not to think that this will not continue. Is it another good buying opportunity for the crypto space? Very well may be. You got to realize too, as inflation is hitting the market, You can't use cryptocurrencies to buy most things still. So when you have to go to the store or you have to pay your bills, you need cash. So there's a lot of people that, whether they have made money or they've mined bitcoins and whatever, they're taking money off the table because they need cash, they need euros, they need dollars, they need pound. So except for the money launderers, the people who, the little guy, the little investor and what have you out there, well, when you have your back up against the wall, you're going to have to do things that you may not normally want to do. So those that were looking for a long-term investment in Bitcoin, and those that at least have it at a lower price, like if you just got in here in the 36,000s, why you wouldn't be selling right here after making a profit of 10% or more on your money in a very short amount of time? Well, that's foolish investing and foolish trading. So that's a whole webinar in itself. I'm not going to get into that in this episode, but that's just the case. So for Bitcoin, we'll take a look and keep watching this. You can see there's not much movement in it. I would use caution as far as rallies right now and be very leery of breaks. So if you're a holder of it, now is maybe a good time to nibble out a little bit and look to buy it lower. I would use that strategy more than trying to buy into this looking to sell it higher right now. Anything could happen. We could have a breakout to the upside. Let's look at how some of the other ones are doing. Ethereum, US dollar. Ethereum is one of my favorites. This is going higher on the day. This is also at the end of a corrective move. You can see this market's been trending lower, bottoming around the same time as Bitcoin. It is stalled. It has this sell signal here. This is a solid bearish engulfing line. Now, a bearish engulfing line sell signal, in the end, that it occurs and puts a short-term top on a corrective move. Remember, this market has been trending lower. Lower move lows, lower move highs. No one can contest the fact that this market has been trending lower. It is in a bear market. So this rally since the middle to end of January has been nothing more than a corrective rally so far. So in order for us to come off the corrective bandwagon, at least be neutral to positive, we have to take out this high. So now where does this sell signal take us? Well, let's see. Let's just go on an arbitrary Fibonacci level basis here. So if we go to here, we should still see this market get down to somewhere between here, and we'll use the 0.50 and 0.618. So let's get rid of the Fibby here. All right, so on a Fib retracement level, from this high probable Japanese candlestick pattern, which, by the way, if you read the book, High Probable Japanese Candlestick Pattern, is written by myself, available on Amazon in paperback and Kindle versions, you will learn how to trade a signal like this, whether it's Bitcoin or the futures or equities, options, what have you, and figure out how to find a downside target and your risk. Well, I'll tell you, your risk is always just above this high since it's at a sell signal. As far as your target, this is not how we find the target for this. But in any type of trend, correction or what have you, to find support and resistance areas that the market typically gravitates to, should your analysis be on the right track, it does help. So if the sell signal is valid, and if this is truly just a corrective rally, the overall trend is coming back into place, it's very likely that we'll see Ethereum dip back down to below 27.11, down to about 25.74, somewhere in this range here, before it stabilizes. And then if it is truly bottoming and basing, this would be a really good area for it to find its bedrock. And then from there, either start a range trade that bobbles around and keeps grinding higher, or bounce and take out this trend. If we look at this on the weekly, you can see that the trend is very, very steep. But then also, if you look at it here on the weekly, we came down, lower move lows, made this lower move low, lower move high, boom. So this, where I drew this on the daily, this is significant on a weekly basis and a daily basis. So as long as we stay below here, you have to assume that the momentum of the overall trend is still in play. So be very leery of being a seller here. I'd be very cautious. Being a buyer, than seller. A seller right now, you're on the right side of the market. Unless you take out this high above here, then you probably do not want to be selling into this move anymore. Above there, I would say look to buy dips and see if strength is coming back to the Ethereum market, let alone the cryptocurrency market. The same pressures, once again, like I think that have with Bitcoin, also exist with Ethereum. So we'll see how this pans out. We'll see where things go. Right now, we don't have much action going on in this market. Today, it's a little bit higher, but once again, I told you we have this sell signal in place here. I believe, and if you take a look at this, the short-term trend has been broken. So it was a nice support line holding up this corrective trend. 2 days ago, we tapped it, or 3 sessions ago, we tapped it. 2 sessions ago, we've closed below it. Yesterday, we closed below it as well, staying below it. Very tight days and ranges. Today, we're slightly higher, absorbing most of the range of the weekend. But it was Super Bowl weekend, and the weekends don't seem to have the interest like they used to. It used to be heavily traded, lots of action, and lately the weekends have not quite seen the typical cryptocurrency action that I've noticed to be the case for the past, especially like year or so. So very interesting what's going on in that space. Once again, I think a lot of people are taking their money off the table. I myself have already done so. You know what? I'd rather have what's remaining in there and as house money and see where it goes than to have this all erode and not have anything to show for myself. So, and you know, it's just you know, pigs get fat and hogs get slaughtered. I think that the whole hog mentality, people were hog wild on cryptos, and there's a lot of people that are sitting waiting for Bitcoin to get back above, back above 50 grand because they own it at 60,000, So are we going to hit that? Very possible. Remember, Bitcoin has less than 10% left before it is completely mined. So unlike these other cryptocurrencies, which you can continue to mine, Bitcoin will no longer be mined, and then we will have X amount of supply, and the demand for that, whether it remains or not, we shall see what happens with it. It will be very interesting. There's also the case that there's a lot of Bitcoin that will never be accessed again because it's stuck in wallets that'll be that are never going to be able to use them. People have lost them. They've been on hard drives and whatever. So I don't know what the percentage of Bitcoin that's been technically maybe destroyed or whatever, or what that is, but that does help restrict it as well. These are interesting fundamentals that right now we can only speculate on. I don't want to get too much into it because until we get to that action and start to see where other markets, how they move accordingly, there's nothing really to really go on. All right, so we went through Ethereum. Now let's go look at something else here. We went XMR. Double check here. We got no more questions on YouTube. Let's see, what about Twitch? All right, no. Okay, we got some viewers there. All right, cool. At least we got another like on YouTube. Thank you, whoever did that. Maybe that was you, Angun. I don't know. XMR Monero, here's another one this one took a little bit longer to bottom out. This one has been trending lower as well. Oops, what am I doing? This is XMRUSD. There we go. All right, now it's a little cleaner of a chart. Okay, so my fair value for this is basically 180 to 220 up in this area here. I think we probed the lower end of this as far as the technology and what this was worth and how the value of what this is, XMR USD. Monero has I think, a good long-term potential to be used as far as its technology. At least until quantum computing comes into play. And that's the thing that's really going to evaporate everything. That's like literally going to make the whole crypto space. It either evolves into quantum computing, which will be all new cryptocurrencies. Bitcoin, Monero, Ethereum will become obsolete because their technologies they won't be able to run as fast as the new whatever comparable thing would be in that space. It's going to change everything, folks. If you don't know anything about quantum computing, you should start to look at it because it's at the forefront of AI, and AI is everywhere, especially with businesses, and businesses now are the big businesses. It's going to be scary what's going to happen to the little guy over the next few years, because when quantum computing comes into play, The little small businessman is not going to be able to compete with all of the major corporations out there. It's going to be scary. Where companies like Amazon and Facebook and a bunch of other tech companies are literally going to be able to swallow up whole industries. It's because you won't be able to compete, or you'll drive out your competition. So you may not absorb them, but your competition will fall by the wayside. Why do I say this? Because AI is unstoppable right now, and we are not proactive. We are reactive to everything, and not being proactive to this new technology, which we are already in a technological revolution, but this is going to take it to a whole new level. So this is not a conspiracy. This is something if you're into the crypto space, please learn about quantum computing, and you take that into account when you're making your decisions as far as investing and what have you in these markets. So our trend here, as you can see, is holding pretty true, but we're looking to challenge this little area here. Now we are short term, coming off of where we bottomed out. We made a lower move high, a higher move low, a higher move high, a higher move low. So this last swing low from a couple sessions ago, this is really our base. Should we stay above this, XMR I think is going to have a nice chance at popping up to this 200 level, maybe even get as high as 220. That could just be setting a lower move high yet, because remember, we got to get above these major swing highs here. So the first one is to take out this one. If it does, that just means that the short-term corrective trend is intact, making higher move highs and higher move lows. The intermediate and longer term trend, however, we are still coming off a lower move low, and until we take out this high, we don't really make a higher move high as far as in the longer term, because this was your trend: lower move low, lower move high, lower move low, lower move high, boom, take this out. So we'll see how this works. Once again, my value is from 180 to 220. Looking for if we're upwards of 350 to sell out of, as far as a trade, if you will. But as far as investing and getting long, this is a good area right here. So, all right, we don't have any more questions, so let's go back to the Euro US dollar, see what's going on here. So since we've been talking, this market started to lay on support a little bit more. We can see that it does want to, looks like the bears want to take control here. They really do. So I think the fundamentals and the technicals we talked about are going to be in place. Hopefully after tomorrow we have a valid signal somewhere. Right now the trend is your friend. This is a bearish thing that's going on right now. You can look at it like this too. For those of you that have read the book, High Probable Japanese Candlestick Patterns, you're probably like, why didn't he say that there was a bearish engulfing line right there? Okay, notice that this was a higher move high, a little spinning doji type of pattern right here, then followed by this big sell signal. This is a bearish engulfing line right here on the Euro US dollar. For those of you that did catch it, you can see why I'm leaning on support so much here, and why I'm looking very bearish in the Euro US dollar. So if this is just a corrective move off of this trade here, this is interesting, and you should see this. 50% mark is right here. We're already there. We hit it. We hit it today, and we're trading right on it right now. So take the fib away. Here's your sell signal. We already tapped into the upper end of the target range. I would assume that most likely we'll probably settle around here, maybe even into it. Tomorrow the big question will be is, does this level here hold? If we fall below a $1.12, 59.60 basically, we fall below here, these lows are in jeopardy. So I would be very, very mindful. If you are an aggressive bull, this is your level. This is your line in the sand. Anything below here, if you're a bull, you're going to be hoping that this is the true range here, and you're going to grind higher. But I think you're going to take heat first before you do, especially with rising interest rates and rising oil and the threat of a Russian invasion of the Ukraine, and then the sanctions. See, here's the thing is, let's say Russia invades the Ukraine. The U.S. is saying, well, we're going to impose all kinds of sanctions on you. That would be the smart thing, because if we get involved in a conflict with Russia, we are the aggressor. We are the one that stoked this fire. We will be in for a long, long problem. Very big problem. And judging how things have been run so far over the past year, I don't care who you're in favor of, Biden or not, he's in no condition to be facing off against the Russian bear right now. I don't know anyone that has confidence in that one, especially with Taiwan in jeopardy, also with China. So these variables, they are going to come into play. Let's say that Russia does invade the Ukraine, whether they're justified or not. Let's forget the argument. What will happen? Sanctions will be put on Russia by the United States. Is the EU going to put on sanctions on Russia? Well, here's the problem. If they do, which they said they will, then their price of natural gas is going to skyrocket, or it's just going to get shut off. Oil and gas and all kinds of other things that the EU relies on that are supplied by Russia, Putin's just going to shut them off. He's like, okay, put sanctions on me, forget you. Try and heat your homes. Start burning down all your forests because you're not going to have anything else but wood to heat your homes with. So, I mean, think about these things. These are realities, so, and this is a sticky situation. I truly hope that calmer heads prevail. The only thing I think that will make that type of situation happen is that if we have, like I said, people start to realize that we created this situation, we need to back down off of it and set things right. I don't think that's going to happen. That would mean we would have to help liberate the Ukrainian people from their own oligarchs and the people in their industrial complex, which is strangulating them. So I don't see any happy ending to this in sight. I do believe that the markets are winding their coils. So today we've been kind of, you think he's just babbling, there's nothing to talk about, folks. I'm not going to tell you there's a trade when there's not a trade. Right now I'm just trying to point out where you should be looking at, where momentum is, and where the short-term trade is, but realize where the long-term factors are, okay? So we have a lot of things to absorb over the next couple days with the numbers, and my biggest point is, until the Olympics are over, nothing's going to happen. When those closing ceremonies happen on the Olympics, that is when the bombs start to drop, both fundamentally and technically in the markets, and then hopefully not from China into Taiwan or Russia into the Ukraine. Should these things happen, well, we are looking at seeing inflation like we have not seen in our lifetimes, and except for a few people that are old enough to have been or in the aftermath of it. But yeah, we will see hyperinflation, the likes this country has never seen, and because of the stubborn stance on the Green New Deal and destroying the oil industry, if that gets changed, which for our own national interests and security, it should, especially in the current environment, but it will not be. And these other mandates, they're going to continue to hold fast on them, especially the COVID mandates. These things are going to become a very big issue. So the U.S. dollar, as strong as it is, we're going to end on this note. I want you to look at this. Right now, the U.S. dollar is coming off of a higher move low, and it's looking pretty strong on the daily basis. This was on Friday, okay? Now, obviously, the dollar is slightly higher because the euro and the pound and what have you, these other currencies. But it's coming into this range where it was back in 2021, okay? 2022, you can see how things have been violently swinging here. Just as we have this rally going to the upside, this is short-term and short-lived. If this whole thing happens with China and also with Russia, the U.S. dollar is typically a currency, it's a reserve currency, is typically a flight to quality currency. The Swiss is a flight to quality, the yen is a flight to quality. If China goes into Taiwan, the yen's going to tank because Japan is also on China's radar. If they go into Taiwan, and they're going to go into a couple other countries, and eventually they're going to try and take over Japan. This is part of their goal. There's no bones about it. It's part of the communist mandates that they've been working on for decades, and also in recent years, and they fully stated it. That's why they run even exercises with their military getting close to Japanese airspace, and also into their waterway around their on the water in the naval area. So those things are pressing. So it's our flight to quality as far as the yen, not existent if China goes into Taiwan. As far as Russia and the Ukraine. If Russia goes into the Ukraine, well, Switzerland's not that far from the Ukraine. Is Russia planning on taking over Europe? No, it's not anything that they want to do. But does that mean that they will not go into Ukraine? Absolutely not. Should they go into the Ukraine and also all these economic restrictions happen, well, Switzerland, do you think that they're going to get their natural gas and their oil from Russia, but the rest of the EU isn't? No, that's not going to happen. Now, they have a lot of money in Switzerland, but they're going to have to spend a lot of money as well. So their currency also is probably most likely going to be a bear versus the dollar in the short run. Okay, so initially, I see a big dollar rally, but then after that happens, comes the big dollar turn, because as interest rates start to go higher, which normally would lift the dollar in these situations, you're going to start to see money flood into different, there's going to be, big money is going to sway out of a lot of places. So, and the question is where is it going to go? Well, we know that interest rate pricing is going to go higher, meaning bond prices go lower. So as far as buying into that market, and here's the thing is that you're going to see a lot of people, if the stock market starts to turn, go to the bond markets, flight to quality. Well, that's going to erode so much capital, because all it's going to do is make a slower erosion. So while the stock market is collapsing, money will go into the bond market, which is not collapsing, but it's going lower. So it's just a matter of reducing your cash, okay, your value, no matter what. Most people will not stay in dollars, which would probably be one of the better things, and I think that that's what's going to end up eventually turning the dollar. You got to realize that if we move forward the way we've been moving forward over the last year as far as our government is concerned, these restrictions are only getting higher and higher, and they're going to double down and double down and double down on their narrative. That means that since they're not going to waive the masks, they're not going to waive the vaccines, they're not going to waive this, they're going to continue to cause restrictions in our own economy, the dollar is going to tank. Now, when you have a tanking dollar with rampant inflation, higher interest rates, higher oil, what does that do? That just compounds things. So I would expect to get ready for this, guys, because if you think it's not coming, it is. You can't say that we're doing the same thing continuously and people keep thinking we're going to get a different result. Well, everyone knows that if you keep doing the same thing, you're going to keep getting the same results. So we're going to keep getting these tensions. We're going to keep on having these factors come into our economy. And like I said, good luck in a year from now when your bread costs $10 a loaf, chicken costs $10 a pound, beef costs $25 a pound, $30 a pound, and you'll be eating, we're going to be coming into the era where, Thanksgiving dinner is coming up and people are going to be like, oh, I guess we're not going to have quite all the fixings, let alone all the people coming to visit us, because no one's going to be going anywhere. We had lockdowns because of COVID. People are going to be self-locking down because it's getting too expensive to go anywhere. For those of you that remember when Bush was president and oil hit $150 a gallon, gas prices are now getting towards those levels. Areas like Illinois, where I live, the taxes already have us up towards those levels of what we were paying back then, just like California, because we didn't have as many taxes as we do now. They've imposed more. So now as oil gets another $20, $30, $40, $50 higher, up towards $150, once again, you're going to have diesel going off at $8-10 a gallon. You're going to have gas going for $8 to $9 a gallon. Well, people make decisions. Not everyone is totally loaded and has the ability to drive at those prices. I mean, think about what it's going to cost people to go to work. Think about what it's going to cost people just to go to the grocery store, just to go run your normal errands you normally do. The average family where it was costing, just let's say you have even an economy car. This is something you need to think about. You got a car, let's say a Kia or a Hyundai or a Honda or a Toyota. Let's say that you only fill up once a month. Well, for you, okay, you're not driving that much, but your cost is definitely doubled. What about for the people that fill up their tanks 2, sometimes 3 times a day, or a week rather? What about your Uber and Lyft drivers? You're not going to have Uber and Lyft drivers or even taxi drivers unless they can raise their prices for them, not for the companies, but for them, because their costs are going so high. Remember, right now, every time you go cheap on an Uber and a Lyft, make sure you tip them, because they're paying more than twice what they did a year ago for gas, and that's by vote. So think about that when you next time you do these things. Take care of the people that take care of you, and don't be surprised that the more restrictions we have in this government as well as others, that you're going to start to lose more and more of these services, because people don't work for free. People aren't going to bear the risk or deal with things when at those costs. So these are all things that we're going to have to live with and see how things go. And once again, I want to thank you guys very much for hanging out with us today for our webinar. And don't forget to check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. And if you haven't liked and shared our videos, please do so, and subscribe to Forex Trading Unlocked on YouTube and Twitch. And check us out at forex-trading-unlocked.com for all your Forex